G'day everyone, welcome back to Pete's Investing, June 22, 2023. This is the British Pound US Dollar currency update. On our weekly, we're showing a bullish momentum, likewise on our daily. However, just be mindful, we've got a bearish divergence playing out and that's almost ready to execute. First off on the weekly, we've got this bullish movement. We've introduced this oscillator down here, which gives us a bullish momentum as well, along with the CCI 150 moving averages and the price chart triple moving average. Just notice as well, we now hit this 61% Fibonacci range on the weekly time frame, and that could be a point where it turns down. That's always a key area to look out for. If it breaks much higher than that, we're going to see further upside. Otherwise, we may see a bit of a retracement to the downside from here. On the daily, likewise, our indicator is showing bullish momentum, but again, it's broken through this resistance we'd drawn previously at 126.79. And we may see further declines through this possibly. So just be very careful about going long until we see more movement in the hourly time frame. On the hourly though, we did have this bearish divergence on the CCI versus a bullish divergence on the price chart. And we've drawn this target area. This is our last video on this dotted line. And the way you would read this or measure it is you draw a channel and you bring it down to the lowest candle within that divergence range, and then you would draw a Fibonacci range between that high down to that recent low. You can see there I've taken it to the first Fibonacci level. Of course it may actually bounce off this resistance, or if it falls through it may actually hit this target area, and I always choose the closest Fibonacci range as a target area. Of course, a lot of these do execute and go lower or higher, depending on which way the trend is going. But to have a better probability of success, I like to choose the closest Fibonacci range. You can see back here we had another divergence, a bearish divergence versus a bullish divergence. It broke down below our channel and it hit this target area. That was between the 61% and the 88%. It actually fell lower than that. So as I'm saying, it can go lower. And sometimes they fail and they don't actually execute at all. So for this to fail, we need to see the CCI break higher than this descending trend line. As well, obviously, we need to see the price also move to the upside. So at the moment, it's still on track to possibly break through this lower channel and then ultimately through this support line, or it was a resistance, we'll call it a support line now. And that'll be our initial target area in the short term. Just be mindful as well, I did say we trade in the direction of the weekly and daily trend, and you can trade these divergences, but I usually use them as a potential reversal, in which case if you're going long in this case, at some area you could probably take your profits and get out with some profits rather than letting the price collapse too far. So I use these divergences primarily as profit-taking opportunities. So to understand how to trade this and other trading strategies, subscribe to my Patreon page where we also look at weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching and see you in a future video.